Yes, good evening, guys. I hope you guys are doing well. So, maybe you guys can confirm on my screen if you can, on the chat section, if you can see my screen and if you can hear me. Kindly confirm if you can hear me and if you can see my screen. This evening, I'll try to as well stream on YouTube. So, let me know if you can hear me and if you can see my screen before we move on. All right, perfect. So, we're going straight to checking on how this week looks like. So I need more confirmation. I can only see one person commenting. I need to see, I really need to see, I need to see more reactions or rather engagement from you guys so that I know we are together. I need more reactions so that I know we are together before we jump into today's business. All right, so uh, as usual, guys, as you all know that every Sunday, we normally do our weekly forecast, whereby we look at how the week performed the previous week in terms of what we have in our watch list as we forecast on what we anticipate in the new week. So for this week, remember on Friday we had non-farm payroll data being released, and the data that came out was way far lower than what had been forecasted. The jobs that were reported, we had 22,000, and yet from the previous month, just a moment. So dollar has been bearish from the data that came out on Friday during the New York session. And we're going to check on what we have on our economic calendar for this coming week. We're also going to align this with the technical part of what we have in terms of price action, and then we're going to look at what you expect. So remember this coming week, tomorrow being on a Monday and a Tuesday, we really don't have anything on the red folder in terms of the news. And then we're going to have some important updates from the economic calendar. On Wednesday, you're going to have, during the New York session, we shall be having PPI for the dollar. That is during the New York session around 8:30 a.m. That is 3:30 p.m. Kenyan time. Then on Thursday, still during the New York session, we're going to have the policy statement for Euro and also the main refinancing rate for the Euro during the New York session. And then later on at 3:30 p.m. Kenyan time, we're going to be having the CPI, going to have the CPI, which is going to affect the dollar. Then we're going to wrap our week with, as well, apart from the CPI on Thursday, we're going to also have unemployment claims. We'll be having ECB press conference, same Thursday. And then Friday, during the London session, we're going to be having GDP for the pound. 5 p.m. We're going to have prelim, I mean, the inflation expectation and also the consumer sentiments, which will be affecting the dollar, right? So that's how our week basically looks like. So from my end, I still expect for us to have more dump of the dollar. Then this actually tells me that based on the data that came out on Friday, for the FOMC, there's a high chance that we're going to have rate cuts at 25 BPS. And in terms of 50 BPS rate cut, might be around 15% and below. But the very high chance is going to be the rates will be cut at 25. So this simply tells me that we're going to expect a massive push on the USD, the USD quotes. That means we're going to continue selling the dollar. So I'm going to check with you guys on the screen. I'm going to share with you what I'm anticipating from the technical point of view. I believe you guys are following and you're able to see my screen clearly. I can see in the meeting we have Maureen, Mr. Veli, Kim is also around, Rubo, Kenneth, Job, Jacqueline, Henry, Christopher, Angie, Esther, and so on and so forth. So let me share my trading view so that I can break it down for us. Somebody to confirm if you can be able to see my trading view screen. Somebody to confirm if you can be able to see my trading view screen. All right, perfect. All right, okay, all right, okay. So we're going to check on the possible zones that we expect some reactions. Just a minute. All right. So let's proceed. Let's proceed. This is a new month. We're in the month of September, and looking at what happened last week, there's a likelihood of us continuing to push down further. And our next target, our immediate next target, as much as we had a shift, although I'm going to be very keen from Wednesday, since we had NFP on Friday, the market might be opening with gaps a few hours from now. So if you had some running positions, make sure you manage them very well, right? Make sure you manage them very well. So the next zone that we're expecting to see price going is around the 96 level, the 96.18 level, but the most immediate one is 96.65, right? Since price traded below these areas of liquidity, I'll be expecting to see some slight pullback before maybe we go further. Maybe price will come to, we have this area that is very key, around 97.6. So you might have some slight push to the upside, and then the market will continue dropping to the downside based on the fundamentals, based on the data that came out on Friday, right? So that's what basically I can be able to see. Even if I go to H1, that's 1 hour time frame, at this area of around 97.6, I'm able to see some type of liquidity. Other people call it an order block. For us, we call it type. That's more of type 5 area of liquidity. And then we also have some sort of pure bearish structure. So it's a zone that I'll expect to see maybe a pump to the up, a push to the upside a little bit, and then maybe shall continue with the bearish narrative for the dollar. So since we'll have that, that simply means pairs like USD JPY, USD CHF, we're also going to have a similar kind of directional approach, like gonna also be moving down. So let's just check it out together. So if you check a pair like USD JPY, as far as we have this area of liquidity above 149.497 that has not been fully consumed. So on the daily time frame, maybe I think I can delete these. This was the other week trades. On the daily time frame, we have this price level, rather the zone 149.498, all the way to around 151 zone, right? So structure-wise, technically, we had this low that broke this high and caused this swing high. Then we have this low as well that caused this high. So the only time that I'll confirm that I'll continue selling USD JPY, it's the moment I'll have a body candlestick closing below. So, as well, as much as you're looking for, as we're expecting the dollar to go down, we don't just blindly sell or buy. We need to understand what are the base zones to sell, and also what is a confirmation that we're going to sell. So since we have this immediate area of liquidity on the daily time frame that has not been fully consumed, I think I've done a refinement. We have the extreme point 150.61. There's a high chance. I hope you guys are following. Kindly confirm on the chat section that you're following on my screen, because I'm as well live streaming on YouTube. I need to know if you guys are following kindly. All right, perfect. So I was saying, since we have these swing points that price us. All right, since we have these swing points, make sure once you join the meeting, you have your mic muted kindly, guys. Yes, make sure your mic is muted so that we don't have a distraction. So I was saying, since we have this swing point, okay, let me break it down for you guys in an easier manner. The market on USD JPY, on the daily time frame, price has been ranging within this area. And we have two areas of liquidity, areas of liquidities. We have two areas of liquidities. We have this zone around here. And we also have this extreme point, which is, I think, that's like type 5. So we also have this type 1. So those are the zones that I'm expecting to see price breaking for us to maybe continue selling. So for me to have better sales, I need to see USD JPY coming to around this area. Then I'll be interested to get some nice sales that will deliver us to the downside. But I want us to look at timeframes like 1 hour and 4 hours and have, I want us to see what exactly. Having some eyes on this area, the market is actually quite high. This was very new space. So I can hear you. Is all right. So I was saying this. We have this range and we have this area of liquidity on the daily time frame. So if you check on if you check on the weekly time frame, price went, of course, to consume this type of liquidity. So if you understand the aspect of liquidation, I'm going to use 4 hours. I'll also use 1 hour because of daily to show you what I'm expecting in terms of liquidity flow before we have better sales for USD JPY. So on weekly time frame, the market came to this extreme point and price reacted on the reactive liquidity engineering. But we have this validation and invalidation point, which is giving us a type of liquidity called type 5. The market has come tapped here on weekly. So I want us to use 4 hours to check the flow of liquidity and see the possibility of where we're going to have the best sell. So we go to 4 hours time frame. On the 4 hours time frame, just a little bit. Let me mark that zone very well to avoid confusion. So we have that extreme point. That's based on weekly time frame. So if you go to 4 hours, the market came tapped and went down. So I want us to see liquidity flow confirmation. So in terms of liquidity flow confirmation, we had this swing point. There's this swing point, price is breaking. Okay, you can clearly see we have a shift here, yes. But as far as I'm concerned, I'll say that is a transition. So the best area for me to have better sales, I need to see price once again coming in, either to this zone for a sell, but the best area for me to sell from is 150.614. That is on USD JPY. So I'll be looking for some nice swing sales from that particular area. And based on 4 hours time frame, if you look at your chart keenly, this high that we had here has been taken out. And then on the other side, this low that we had here has also been taken out. And then price came reacted on it as in form of liquidity engineering. But if you look at this zone as well, just a little bit. If you look at this particular zone in terms of price, just around this area, you can clearly see that we have some slight break above it. So that tells me there's a likelihood of us going all the way to the upside. And if you understand the aspect of liquidation, this area is an area of impure liquidity. So maybe once the market opens, before we continue with the bearish trend based on the dollar performance, so I'm looking forward to see the market coming up to the extreme points of liquidity. And then we'll continue selling. So that's what I have on USD JPY. So maybe you shall as well look at USD CHF. Then I'm going to look at other pairs, and then we'll also look at gold. So we can look at USD CHF. USD CHF. On USD CHF. Okay. All right. So from the previous week, guys, we should be in a position to trade with understanding, not imaginations and hopes. So, and I always say that if you combine fundamentals and technicals, and you have a very nice synchrony, then there's a high chance of you going to do things right. So, looking at the daily, I'll start with the weekly time frame. See if, okay, on the weekly time frame, on the weekly time frame, we have a zone of liquidity. We have a zone of liquidity, which is at, you see, I think it's confirmed on 4 hours. So we have this area of liquidity, which is type 5. We have this area of liquidity, whereby we have the validation and then validation point where I've just circled it. And this candlestick of, I think, the last week of July, it went and reacted inside this zone. So I'm going to confirm that on 4 hours. But before I go to 4 hours, I want us to see what do we have on the daily time frame. The daily time frame, you can clearly see that we had break of structure here. And then at the extreme point, I'll probably say at this zone, yeah, we have a type of liquidity, which is type 1. Price came tapped on that zone. The market has been moving to the downside, right? So there's something to do with the liquidity flow confirmation. As long as price has touched on an area of liquidity on a constant time frame. So initially, before the data came out on Friday, I was anticipating to see dollar pushing up, but you saw how the data came. So dollar is kind of weak, and we might be pushing low further. We might be pushing low further. And those guys, I've always told you that whenever you see this candlestick, it's called a banker block. You can always have some nice sniper entries. That's why we have this reaction. As much as dollar was dropping, that's why we had this massive move. There's a reaction that happened on this banker block. So From the weekly time frame, you can clearly see we have that zone and the price has tapped on it. So if you check on the 4 hours time frame, the market came to the extreme point of that area where we have the impure liquidity. If you do it, it's around this zone and reacted. But the market reacted exactly on a zone where we have, it's a flip, it's a very nice flip. And from 4 hours time frame, we have seen also a bearish structure being formed. There was this swing point that was this low, the market went up, then we had a break of structure. So we've been having break of structure to the downside as well. Just a moment. So if you understand the aspect of liquidation in terms of price, after this low being formed, the market went back, came down. Another second, this was the second liquidation. Then price also broke structure here. Another liquidation that happened this area, and then the market has broken below this zone. So on USDCHF, I think price has confirmed that we're gonna continue selling. USDCHF price has confirmed that we're gonna continue selling based on the structure. And if you're going to sell, the next target is 0.78724. That is a zone that will be interested to see price breaking below, because liquidation has been happening based on the structure that we're seeing here. These are the liquidations that we're seeing. All these are liquidations. Price has broken this low, and the market reacted as well on these key zone. You have this key zone. It's more of a zone that is was acting as support. So that's where price reacted. So I'm looking forward to see price continuing to the downside. But as much as you're having prices continue to the downside, on the 4 hours time frame, at the extreme end, there's this area where we have a type of liquidity that has not been touched, rather that has not been mitigated. So we have type 1 here. Price came, tapped, dropped, shift has been done. So I need to see probably price coming to clear these trendline liquidity, right? Before we sell very well, or rather we sell nicely. So my best zone to sell from is there as you go down. So the thing is, as much as you have clarity in terms of direction, you also need to understand what are the best areas to execute your positions. As the market opens, of course, you're going to get updates as the week goes on. You're going to get updates, the London session and the New York session, so that we can take those nice swing trades as well as we take the intradays, right? I hope you guys, if you're still here and you are with me, please let me get some reactions on the chat section, kindly. All right, sorry for that. So I was saying we have this trendline liquidity. Guys, you see, as a trader, you need to understand what kind of a position that you're taking. You don't just jump into sells or buys without knowing the best areas to sell. There's strong zones based on higher time frame. And if I go back to weekly time frame, already we have had a confirmation of the bearish trend, because there's nothing that has confirmed. So there's a high chance that the 0.78724 is going to be broken. So we need to have a better entry. So there's this trend line liquidity on weekly. If you come to the daily time frame, you'll as well see it. And then to add on that, on the daily time frame, we have this type of liquidity here. And I believe almost 50% of it, let me try to highlight it, this area. I think almost, is it 50%? That's not really 50, but yeah, 50% has been consumed. So price either will react on this zone or rather go to this extreme point, and then we're gonna sell. And if you'll be selling, we're going to break this zone. But I'm gonna give updates once the market opens and we have clarity. So that's what I have from my end. So USDCHF as well, I'm looking forward to selling. Is there anyone who has maybe something to add on before I move to the next pair? So that is USDCHF. Mr. Harris, are you there? Harris.
Yes, Mzee Baswet.
Maybe I can give you a chance to share before I proceed. Maybe you have something on your watch list. More
Let
so
me
on any
share.
pair or dollar.
Actually, I was seeing something on the JPY pairs. The
Okay.
dollar pairs not clear on my end.
All right.
Let me share then. Just some minutes, then you finalize with gold.
It's okay. All right.
Okay, now, so are we sharing?
I'll stop sharing my screen and then you can proceed.
So on the dollars, Basmati stated, is my screen visible? Just a minute. Just this. Yes, is my screen visible? Yeah.
Guys, you can confirm on the chat section if you can be able to see Harry's screen, kindly.
Mhm.
All right. Yeah, guys are able to see it. You can just proceed.
So on the dollar index, as you can see, the price has been ranging to this area, around this area, around 98,800 levels and 97, 0.7 for that level. So price action came back to the previous support or demand zone. And as we know, in a range, we buy low, sell high. So price action has tapped our base, anticipating it to come to take this liquidity to the upside. Maybe later on we continue selling. So as we open tomorrow, expecting dollar strength just to fill this liquidity. Does not mean that it will go direct like that. It can take even, because it's on the 4 hours, can take some days, maybe up to Tuesday, Wednesday, take out that liquidity, then continue selling later on. But on intraday basis, anticipating price action to fill that gap there, just still in a range. Now, the JPY basket, for the guys who trade the JPY, it's good to have to look at the JPY basket and see, get a narrative of the JPY pairs. You can see a change of character to the upside on the JPY and the JPY, and then we had some retracement after NFP. So anticipating price to retrace to that level. Had a type of one there on the daily, to the daily, or the 4 hours on the daily. Yeah. On the, let me see correctly, on the 4 hours, and then price might continue going up. So because we have this shift to the upside, most likely you are going to have a pullback as it has pulled, then continue buying the JPY pairs, the JPY narrative. Now, the same context in relation to our pairs for GU, I think you are discussing with the Henry in another forum. We have a nice type 1 liquidity, not GU, GJ, sorry, PJPY. We have a nice type 1 liquidity on the 4 hours time frame. I'll run there, and we'll be anticipating to look for sales opportunity after the pullback. It is even in line with the basket narrative, the JPY basket narrative. So a pullback on the JPY, then a sell that can get us a nice trade there. So I'll be anticipating that sell on the same EU. The same narrative. We had a nice type 1 on the 4 hours liquidity there, then continue selling on EU. Think not EU, EJ. Still price action is ranging, still ranging. in that zone there from I think 25th September to date. So likely price going to tap that zone and then it continue selling, even if just sell to come and pick this liquidity down here. So for EJ and GJ and the Euro JPY EJ, I think we have positive setups tomorrow as we open the week. The only issue maybe it might be the gaps because we had NFP was quite volatile on Friday. So the market is likely to open with gaps, but let's just be patient to see what happens. For Euro USD, not Euro, AUD USD, no clear formation on it. Just have a shift to the upside, a clear break of structure. The upside price is almost coming to the highest point ever achieved on the currency. So this one I'll be a bit skeptical, not taking trades. Maybe I'll just still continue buying it if I get a nice formation on it. So I'll sit out on Euro AUD USD on the same. On USD card, we have a nice setup there. I think it's a more of a type 1 liquidity on that supply zone. I think if you look at it on it's daily, yeah, on the daily time frame, we have a nice area 1 liquidity there. So I'll be looking to short that asset maybe the course of the week from Wednesday, Tuesday there. This is when it's presenting a better opportunity to trade. So this one I'll be still sitting out, but it's still encouraging for dollar to strengthen. But this one, we just have to wait for it. The best, yes, there can be setups maybe to come and fill this void here that was caused on Friday, but don't have, okay, on my end, I don't have really a clear opportunity to trade, but the A++ setup is at that supply zone there. Just wise to wait for it there. You'll get a better opportunity to trade and have a nice RR according to our trading approach. I think on USD JPY, no, Euro JPY, USD JPY, yes, we have same sentiment with you. I think you have highlighted it out. Price action is still on a range there, but on the daily time frame, we have nice setups at this top zone area 1 and also at the bottom there. So still not really adamant on taking the trades at this zone. On the same, I think you're showing us as if you have a buy. I think you'll elaborate on that. But on my end, even if I was trading this thing tomorrow, I will still maybe look at sales at that point, but it's not giving clear price action at this zone. Maybe sell to the downside there because we have a shift here. But in other words, this thing is still ranging in this zone. A ranging market is not very, very nice setup to take in because it can come up to this point, then sell or come at that point to sell. So it just be ranging at that zone. But I think if price action tends to break this zone, this range here, top here, or bottom here of the range, will have a nice key area of interest to take the trades from. It's good for scalping opportunities, but according to our approach, you don't really recommend it. But let's wait for the A++ setup. They're worth waiting for. Hata kama utapata huko Tuesday, Wednesday, you'll get a better RR than risking your sell here and it can taps you out and then goes to your target. So for this week, those are the pairs I'm targeting. But for tomorrow, GJ and EJ are the ones we will be focusing on as we open the week. Back to you, Basweti. Mzee Basweti, back to you.
Thank you, Harris. That's good. I think you have just summarized it in a good way. Maybe you're going to now talk about gold. Let me just go straight to gold. I highlight a few things and then I'll talk about gold and then I highlight a few things. So on gold, You guys can still see my screen? Okay, so okay. You see, there are times now you need to really need to use common sense and logic. I believe one of the person that I know understands very well the psychological zones is Henry. So price has traded above 3,500. 3,550 was my last psychological zone. My next zone is 36.25 as we move on like that. So if you look at price action in terms of liquidity, let's start with 6 months. We are strongly very bearish on gold. That is the 6 months time frame. If you check also on 3 months, we are strongly bearish, right? So a zone that I'm looking that is very important, 3,300 is a very important zone. Then if you check on if you check on the monthly time frame, we have that 300 zone, which is an area of liquidity that has been created as type 5. If you look at this candlestick, this type 5 area of liquidity, probably the market will come there before it even pumps further, right? Maybe the market will come there before it pumps further. You see, the thing is all about patience and knowing what you're doing. Remember, some time back when we had this trade of 31.24, remember that swing that we had? It was around 31. This one, market took a couple of almost 4 weeks before it came to entry. So this one as well, if you measure the number of pips for a swing, more pumps, but I'm gonna break it down. That's like almost 2,818 pips. But let's see what happens. So monthly, we also very strongly bullish. Weekly time frame, we also strongly bullish. But now, if you understand the aspect of key zones, my first key zone, I think I can delete everything and break down the chart in a cleaner manner. So if you check on the weekly time frame, structure-wise, we have these key zones. We have these key zones. So we have these in pure liquidity on weekly time frame, which is an area that I expect to see price coming to retest it. At this area where we have the impure liquidity, I'm able to see weak overlap, which I believe on 4 hours time frame, it's a structure, right? It's a structure. So from 4 hours time frame, that is a key zone. You see the market on gold, price has been reacting on this zone. The market has been reacting on this zone, you see. And then we had a couple of touches. So in terms of price being rejected, we had the first touch. It's very important, especially for gold, to note this. We had the first touch, sorry. Just a moment. We had the first touch. We also had the second touch around this area. We had the third touch at this area. And then after that, we will see the market breaking above this area early this month, I think the first week of this month. And then since then, the market has been pushing to the upside. So I'm looking forward to see price coming to, I'm looking forward to see price coming to this zone and maybe push further. So 34, 36, it's a zone that we need to really consider because at that area we have a weak overlap, which we'll check on. We're gonna check it on 1 hour and see what exactly we have. Just a little bit. Yeah. So if you go on 1 hour time frame, because you're using the daily time frame, at that area we have an area of liquidity, and we could see price impulsively moving from that zone. So here we have trend line liquidity, talking about this. So once we have a confirmation, which I'm going to show you, we're going to expect the market to come to this area. Maybe before now we have the next pump of probably more than 2,000 pips upside. So if you check on the weekly time frame as well, the same zone, there's what we call FTS, guys. On weekly time frame, we have week overlap. The daily time frame, we have week overlap, and the zone that we're having a week overlap. Why am I considering to be a very nice zone for a nice reaction? It's because more so for a swing. It's because of the market was being rejected. So if you understand the levels of flips, this simply means if the market comes down, this area initially we had a lot of strong sells around this zone, but since bulls created a structure before market going up. So when I'm talking about the structure, we had this transition level. We had this transition level before the price, decided to break the zone that we had strong sells. So we had that transition level. And if you understand liquidation, the price has been doing self-consumption. The market did, if you narrow down to lower time frame, like 1 hour, 30 minutes, 15 minutes, you'll be able to see the clear liquidity consumption. So the best area that I'm expecting now the market to see, it's either price will come here, push up, or that's the first reaction. But don't worry, as long as you're here, I'm going to give you updates. Or price will come deeper and push up. I'll give you some principles to follow when you're going to look for those swing entries for more buys. Just a matter of patience. So we have that zone that I'm expecting. Anytime price breaks resistance, there's a high chance it will come in. So for me, I call this impure liquidity. This is an example of impure liquidity, but this is based on the daily time frame. So if I narrow down to 4 hours, I'm able to see some sort of kind of type 3. Maybe it will be confirmed on 30 minutes. Let me see. On 30 minutes, it's an area we have also an impulsive move. We have, I'll probably say here, we have liquidity engineering. That's around 34.41. So we have liquidity engineering around that area, because this low was taken and this high was taken. So if the market will ever come down here, we expect to see some nice pump to the upside. So if you go back to 1 hour, at that area, we can see reactive liquidity engineering, and we have a type of liquidity we call type 1. I hope you guys are following and we are together on that. Now, so since from here to the downside, it's a lot of pips, of course, you could probably get some counter moves. That's like almost 1,500 pips. So we need to find a way on how to get counter sells. So once the market opens, especially on gold, structure-wise, we have clear push to the upside. We had a break of structure here. We also had another break of structure. And this break of structure was caused, this was an impact that came from NFP data on Friday. This was data that came from last week on Friday. So the market, you really guys need to understand, the market came tapped on this zone. Hold on. The market came tapped on this zone. I will probably say that is some sort of pure bullish. And then from this reaction, price went all the way, broke this high, right? And the market is now coming back. So at this area, before we come to the extreme point at the downside, so that you can continue with the massive push to the upside, I need to see price coming to react. Hold on. I need to see, here we have some sort of liquidation. So this area, it's a key zone, because we have impure liquidity, we have an imbalance, and then at the extreme point we have, if I look at it very well, I'm seeing some sort of transition and then a shift. So I need to see price coming to react. 35.50 zone, it's an important zone that probably will give us more pumps before eventually come to the downside and push up. Remember, price doesn't move in a straight line. It moves from areas of liquidity to the next area. Price it goes for liquidity. So for immediate reactions, probably maybe tomorrow. So we expect the best area to look for more buys is 34.50 zones. You see here, hapa. India, the best zone ya kutafuta more buys. Of course, you don't enter those buys blindly. You need to have, I was wondering why is this thing compared to a magnet. So I need to see price coming to this zone for me to maybe get some continuation of buys from that area. That's already 400 pips. That's nice pips. If I get 500 pips for gold this week with a nice lot size, I think I'm done for the month. Anyway, so looking at looking at 15 minutes. These are clear zone. These are a zone of those guys that have been teaching. You understand? This is what we call it a flip zone. We call it the extreme point. Sorry, I mean we call it bullish different zone. Bullish different bullish. So that's where I'm expecting to see price coming. Right. So the best zone to consider for buys 35.50. Is there anyone who has maybe a different opinion or a view on gold? Anyone who has a different opinion or other view on gold? I'm open for critics and ideas as well. I'm not a market maker. I just share my ideas based on my strategy, and whatever happens with the market is none of our business. Ours is just to execute trades with proper risk management. Then we wait for the market to do whatever it wants. So anyone who has maybe an idea or a different opinion about gold, so that's what I'm seeing. Gold. If you look at
Maybe to add something,
yes,
Henry was telling me a while ago that when a gap opens around your Messiah Satisa, you should enter with all your inheritance and put it and to fill that gap, especially after maybe days like NFP. What do you think about that? Maybe like this gold can sell can open with a gap. So should we is it advisable? Is it sustainable? Even that is the right question. To be entering those gaps to be filled after maybe a weekend of NFP.
Now you see, right now, we don't need to trade the market with hopes and imaginations. We need to trade with data and structure. So clearly and logically, we have this gap here, yes? Sorry, I mean we have this imbalance, and we have this extreme zone that caused the push to the upside. I think this was NFP effect. So we know very well, you can either trade with confirmation or rather you can take aggressive trades. Maybe, so we have something like this. Okay, let's talk about it. So we know very well simple things. We buy at the most discounted price and we sell with the most premium price. In terms of gaps, of course, the market has to fill these gaps, but you're not guaranteed that the gaps will be filled once the market opens. Probably we might open and the price pushes up, and maybe later on Tuesday or Wednesday, that's when price will come around this area. So for me, I will say it's kind of riskier if you'll be selling with the aspect of the gaps. It depends, it depends. I will just wait. If I have to take or execute trades once the market opens, I just have to wait for 30 minutes or 1 hour before I take an action. Because it's easier for you to blow your account with these. Now that we had NFP on Friday, if you are wrong, this market we don't predict. We react based on what price shows us. Clearly, yes, we have the imbalance. around this area between 35.72 all the way to, let's say, around 33.50 zone, 55 up. So the safest way for me that I'll execute a trade is to wait for the market to come down here and buy. But again, based on structure, if I see on the lower time frame, if I'll see price forming a structure like this, I'll see price forming a structure like this, then I can take sales from around this zone, then target this area. That will be almost for 300 and something before maybe I think of buying. And there's also a possibility of the market coming here, clearing all this liquidity and come to this extreme point before it buys. But based on what I'm seeing on my end, I'm just looking forward to see, I'm looking forward to my best zone to buy from is 33.50s, the 33.50 zone. Yeah. This is the best zone to consider buys. My best zone to consider buys. Because if I narrow down to 3 minutes, you'll now get even finer things. You'll be able to get finer stuffs. We have, we have this key zone here. The extreme point, we have a type of liquidity, type 1. So, lower time frames are for refinement of a good risk to reward ratio. So, nikizidi ku narrow down, I'm able to see in 3 minutes, I'm able to see, there's liquidity engineering, there's a type of liquidity here. Let me measure the pips. That's type 1. Pips are almost 60 from that area. So, just a moment. Yeah, 35.50 is a very nice zone for me to consider the buys, because that area I'm able to see reactive liquidity engineering. Yeah, that's my best zone too. Me, I'll just be interested in buys, but you can as well take sales if you get a confirmation. Yeah, I think that's what I can see from my end. Nothing much. Because if I go back to 4 hours as well, it's a type of liquidity there that we have, which is what? Type 5. This is the area that caused this break of structure. So if the market has to come down, then this will be my first area of trial to take buys. If this one fails, my next area of interest based on confirmation is 34.43 for me to get more buys. So we have that area and we have this area. Then I talked of 3300 zone. I've seen somebody asking a question. I think if I go back to the monthly time frame, well, I'm considering that 3300 zone, it's because of, yeah, that's monthly. If you go to daily, you look at areas that have not been, consumed. So that area we have liquidity engineering on daily. If I go to H1, the zone that we had, we have an imbalance that has not been fully filled, and at the extreme point, I'm able to see here we have impure liquidity, which as well has not been. Yeah, we have impure liquidity around this area. We have impure liquidity that has not been, liquidity engineering. Perfect. So that's another extreme point that I'll be looking forward once price comes there. It's an area I will consider for better swings, but based on short-term trades, two possible areas for better buys, 33.43, but my immediate zone is 34.50. Yes. So not chasing the market, just react based on transaction. So if you measure the pips from this area, if you'll get a confirmation to buy from that area, that's almost 400. That's like 400 pips. That is it. So you guys, I'll summarize by saying this tonight. As the market opens tonight, I mean this week, be very mindful in terms of risk management. It's a new month. We already have clarity on a few things. And also remember this week, we also have CPI. We also have the PPI and all that. So make sure you get updated on your your fundamental, your economic calendar. Before you execute any trade, make sure you know what is happening on that day, and whatever data that is coming out, what is it affecting, which pair or which currency effect what impact does it cause on whichever pair that you're trading. Then before you execute that trade, of course, the number one thing that I always tell people is calculate your risk, know exactly how much you're willing to lose before you click that buy or sell. The other thing, no, are you taking an intraday? Are you taking a swing? Don't trade without having clarity, because it's if you know that you're taking a swing and your risk to reward ratio maybe is, maybe you're taking an intraday and your risk to reward ratio maybe is 1 to, let's say, 1 to 3, 1 to 4, 1 to 5. Once you hit your target, you don't have any business with the chart. You call it a day, or you call it a session. Don't be that person that you are looking for an intraday, and then since you're looking for an intraday, you start holding trades without, like, now that means you'll be going outside your plan. But there's also the other approach whereby if you really understand the liquidity convoy cycle, you can take an intraday, and then if you understand proper direction from the constant time frame, you can hold your intradays as swing trades, or rather you can hold your intradays to become midterm swings, or rather weekly swings. So up to that point, allow me to end it here. So tomorrow we resume our sessions as usual, Monday morning session. Those guys, we are having classes. And then 9:30, we shall be on Discord for our usual daily breakdowns for nice setups. And then later on in the evening. So up to that point, unless there's somebody who feels like they need to say something, I have some 5 minutes before we end our meeting this evening. Anyone who has maybe a question or a concern or something to add on, or any concern that you want to raise, please feel free to unmute yourself, and I'll give you a chance to say something. Silence means either we are all good, no question, no concern. Have you guys been following the session throughout? Maybe you can confirm on the chat section if you've been following and if you've gotten something. So this session is recorded as well. It's on YouTube, so you can go back and watch it. If there's something that you want to confirm, you can go and watch it. So since there's no reaction, we resume tomorrow. I'll be up early in the morning, see how things goes, and then I'll be giving out updates during the London session as you pick it up from there. So expect some good. I already now have clarity in terms of dollar direction. So I'll try to give at least not less than 5 setups this week. Let's say 2 to 5 setups this week with good risk to reward ratio. So make sure whichever trades that you'll see as well from members, and they align with your approach and your personality, take action. I always tell you guys every time, you will never move forward if you're not going to take action. And for you to make money in Forex, you have to remove fear from your life. Take the action, but have calculated risks. Don't just take trades without having proper risk. So up to that point, adios. Have a beautiful week ahead and a peaceful week. I'm looking forward to see a successful week this week. So I also expect a lot of engagement within the community within the community members area of discussion, so that we give each other's ideas as we break down for the week. So thank you so much. You guys have a lovely night and have a very successful week ahead.